Our next guest is a well-known investor, best-selling author, political pundit, and of course, a gold bug. And even if we haven't seen the panic into gold he was calling for this time last year, he warns it's still coming. Doug, thanks for joining us from Washington today. Nice to have you back on.
Thanks, Daniela. It's a pleasure to be here with you.
So, exactly 1 year ago, you came on the show calling for a financial turmoil and panic into gold. We haven't seen that happen yet. Now, instead, gold has fallen under pressure lately. So are you still sticking with this outlook, Doug?
Well, let me say that gold is not the only thing that I do, but I think that gold is probably the most important thing that anybody can do right now. You can be in the stock market, and as Steve Sugarroot has said, it's a melt up at this time. But to me, the most important thing at this moment is preserving capital. So how do you do that? Where do you go with the money that you've saved? Yeah, you can speculate in the stock market, and maybe you'll make 5 or 10 or 15%, but at the risk of losing half of everything that you've got. You can't be in the bond market. That's in a super bubble. You can't be in real estate. It's illiquid, and there's a bubble in major cities. So, I'm basically saying the same thing that I've been saying for years. This is a twilight zone situation that we have right now. So where do you keep your money? And the best place to do it is in gold, not for capital gains, but for preservation of capital.
Well, we saw what the Fed, what Yellen said today. So I guess what does this current environment of, growing risk appetite and monetary policy tightening all mean, though, Doug? How can the current backdrop be favorable here for the metal?
Look, these people are printing up gigantic amounts of money. You've got to keep in mind that the U.S. government is running a cash deficit of $1 trillion a year. Where are they getting the money to finance that? The Chinese aren't buying that paper anymore. They're basically selling it all to the Federal Reserve. And at this point, it's not going into the economy at large. It's going into the financial markets, which is driving all these financial instruments, mainly stocks, higher at this point. So we're at the edge of a precipice, which we have been for the last several years. And meanwhile, you have Janet Yellen saying that it's going to be good times for the rest of our lives. The danger's over, fear not. I mean, this is top of the market talk. So I haven't changed my tune. We're looking at a catastrophe of unparalleled proportions. I mean, Daniela, you're aware of the fact that the statistics are that about half of the people in the U.S. have zero savings. They can't even come up with $200 if they need it to meet a bill. They're spending more than they're earning and putting it on their credit cards. It's a very unstable situation in society as a whole. Forget about in the financial markets.
Okay, so let me ask you this then. I've spoken to other gold aficionados, and they've told me that there are levels that even they would draw the line in the sand for them. So how about for you, Doug? Is there a level in gold that if reached, you throw in the towel?
No, absolutely not. The reason why is that it's the only financial asset that's not simultaneously somebody else's liability. And that's why you want to put it away and save it. It's not a speculative vehicle. It's savings in the most basic form. So this is not to be viewed like trading soybeans or trying to trade copper or something like that. This is a savings vehicle, not a speculative vehicle. So no, it's not a question of throwing in the towel. If you're going to throw in the towel on anything, it's going to be paper currency.